So this is our first push button trading AMA, which is Ask Me Anything. Hello, Tracy. How are you?
Hey Matt, I'm good. Thanks. How are you?
Awesome. I'm great.
Yeah.
So in this section, we're going to be talking about income and earnings expectations. We got a list of questions here, kind of queued up and ready to go. You ready for our very first question?
Bring it.
All right. So Chad asked, "How much can I make per day, week, or month?" And again, the context here is our bot trading program.
That's the interesting thing is that this is probably one of the most common questions that we get asked all of the time. And
Yep.
I know that you like to say things like you're focusing on the wrong thing. I say the same thing because it's not about the output. You have no control over that. Trading is trading, and trading is you can't control it. And it doesn't matter whether you're manually trading or whether you're automated trading, the outcome you have absolutely nothing you can do about it, but you can control the process of what you're doing. And that's what we focus on with
Yep.
push button trading. The
Right.
other thing that I'd like to point out there is that with automation, at least with the stuff that we do, there are millions, if not trillions, of different variations of settings that you can use in order to put your automation to work. And to definitively give an answer of per day, per week, per month, we can't give you that because there's trillions of outcomes that could happen with that, and
Right.
we just don't have the answers for that because we give a lot of the control back to you.
At push button trading, we try to focus on consistency over time. A lot of YouTubers or trading personalities tend to focus on, I made X amount, 50,000, 200,000. I made some huge big windfall, which is really tough to consistently do that over time. You can get lucky from time to time. You can be in the right position when, the market kind of pushes it massively in your favor. Again, all of that has to do with, some of that is outside your control, and a lot of it has to do with the focus on the process of making sure you're doing what you can do. And as most of you know, when it comes to bot trading solves some problems. So like emotional reaction, over trading, revenge trading, like those are things that bot trading can solve. But as you all know, you can be in an amazing position and the market just decides that they're going to kick you out of it for a loss, right? Same thing, you can be in an amazing position and the market can be the wind at your back. And so it's really tough to give an exact dollar amount. We've had people, get accounts funded and have massive payouts their first month. We've had people work on it for months and months before they got their first payout. It's really tough to give a X amount, X number of dollars per day, per week, per month. It's really tough to do. So yeah.
Yeah, I think one more thing I'd like to add to that is that
Sure.
I think one of the misconceptions when people are asking that is out in the world, you're going to see a lot of companies out there that are offering, here's your subscription and you are going to be automated trading. But the difference is that they are creating the automation, they're providing the settings and they're running the system, and you're just kind of subscribing to that. It's more of a follow me plan than
Right.
what we do. So push button trading is very different in that respect because we're teaching you actually how to utilize automation and apply it to your trading. So you're learning a skill. You're not just following what we're doing. So
Right.
that's, I think, is the difference because some of those companies, yes, they should be able to show you what the historical performance has been and what you can expect from that. It's a very different thing. So understanding what we do versus what some of those other automation companies do and recognize the power that you get from doing what we do versus that. You have full control over the whole process, as Matt put it.
Right.
So
Right.
just wanted
And
to
our
add.
pricing model is more of like a do it yourself or done
Yeah.
with you model. Some of these tools and companies Tracy's referring to start at $10,000 a year. So obviously we're not priced that high, but those are done for you models, and it's pretty easy to have expectations attached to, some kind of high ticket service like that.
Exactly.
Yep. Yep.
Yeah, for sure.
Awesome. So let's see. Question number 2, Brittany. She says, "Can I quit my job doing this? Can I go full time?"
It's another common question. I would assume that's everybody's goal, but it's not something that you're going to do today. So, for
Certainly not day
example,
one.
no, it's not day one. And you know what? Trading, again, it doesn't matter whether it's automation or whatever. I think trading has one of the biggest unlimited ceiling of what you can make. The reward and the risk is so much higher than any other
Sure.
trade or profession out there. And so when I hear the question, can I quit my job doing this? The answer is yes, but in time, it would, to me, it
Eventually,
would
yeah.
be like starting first year university and saying, can I quit my job because I want to be a doctor? It's like
You got
you
to
got
go
to
through the
wait.
training.
Yeah, you got to earn it.
You got to pay
You
your
have
dues.
to,
Yeah.
yeah, you got to pay your dues. You got to earn it. And so, yes, I think you can quit your job doing this. Yes, I think you can make it full time. Yes, I think automation can be a full time thing. But you need to put all your eggs in front of that, or all the horses in front of the cart first before you put the cart in front of the horse. So I wouldn't focus on that part yet. What I would focus on is making sure that you have something that's stable right now that can help you get through the learning process of what you're doing. And that means that you need to have a steady flow of income so your bills are taken care of, and your expenses are taken care of, your living expenses are taken care of, so that that's not an added stress into I need to pay my rent. That is just a
Right.
recipe for disaster. So
And that leads to
keep
more
what you have.
emotional
Yeah,
reactions. Yeah.
exactly. Keep what you have, keep that income coming, and then, you know, work towards that. That's the end goal that you'd want to get to, but you need to nail down the process in a very safe environment until
Right.
then.
And I would say, think of trading kind of like a side hustle. Your side hustle has to prove itself. You have to obviously learn some techniques, some emotional mastery, some mindset. There's a lot they have to do. There's a lot of mistakes you still have to make. So before you can understand, oh, that's why the coaches tell me to do it a certain way, right? You have to kind of pay your dues and get some pain. And as you all know, pain is what brings the lessons. The lessons how you learn, and being able to like get full time, I think happens over time. But a lot of people assume just because you paid a small upfront fee or something, you're ready to go full time immediately, or that's not really the case. You do have to understand what you're doing. Obviously, you have to enjoy it, right? If you've never taken a trade before in your life, how do you know you're going to enjoy the overall process? It can sometimes be a lonely thing as well. So let the side hustle kind of prove to you the income stream. And Tracy and I both have like students in our company that are literally in the middle of transitioning to full time, but it came with quite a bit of work and some pain and lessons along the way. So. Yep.
Exactly. Yep.
Great
Yep.
question, Brittany. Let's see. So Derek asked, can Tracy, can you and I guarantee a payout? Can we guarantee like a funded account payout?
No guarantees in trading, period.
Yeah.
So there's no guarantees at all.
Yep.
And anyone that does guarantee you a payout, I think, is setting you up for a disaster. I think that's hype. And I
Right.
think that yeah, I just, it's not something that I would do. It's not possible for us to do it. It's out of our control. We're not the ones that provide the payouts, for one. It's other
Yep.
companies. And so they can change their rules at any time. They can update their rules. They can deny you a payout for whatever reason. There's nothing that we can do to change that. What we can do, though, is we can help position you in a way that gets you to a place where you're more likely to get a payout, or we can help you refine your process to avoid getting rejected on payouts. Those are the types of things that we can guarantee. We can work with you towards getting to that stage. So,
Right. Yeah, and
yeah,
I think it's an interesting question because I don't think any company out there guarantees payouts. Just like universities can guarantee a salary at the end of the 4 year, or 6 year, 8 year program, 10 year
yeah,
program,
great point.
they can't guarantee anything, right? And so I feel like that kind of a question is coming from a place of I want certainty, and the stock market is really the opposite of certainty. The futures market, options, like they're all those markets are the opposite of certainty. At the end of the day, we can control our process, our emotions, our risk. The rest just plays out over time, right? I would say also that when it comes to our technology, we can kind of improve your odds a little bit more than just randomly trying to go on your own for funded accounts, manually trading, and in Trade-Evade or TradingView or NinjaTrader, we can improve your odds a little bit, definitely. But no one that I know of guarantees payouts. So
Yeah. And Matt, if you don't mind, I'd like to add another thing to this, because the whole guaranteed payouts, I like to tell a lot of the students that the funded account program, as much as I love the funded account program, I think it is a really great platform for learning.
to start, yep.
Yeah, to start. I think it's a really great platform for learning. And if you come in it either manually trading or with your automation trading, if you approach the funded account program as a safe environment, lower risk, because it's a low monthly fee or one-time fee or whatever it might cost depending on the funded account program that you use, to get live exposure, live opportunities to place live trades within the markets without losing your own money. But at the same token, building that experience. And if you do it in a manner that leads to some progress and leads to some success, you might get some of that recouped. But the end all should be to work on the process, develop your skill, get to a place where you have the confidence, you have the I guess, comfortableness and confidence to be able to trade your own personal money. And that's where the freedom really lies, is not really focusing on how can I get payouts, how can I, get all these accounts funded, and how can I just make a living off of funded accounts. I think that's the wrong place. You're not taking full control over your own income and your own potential. The full potential here comes from learning in a safe environment and then transitioning into trading your own accounts. Both, you, Matt, and I trade our own personal accounts with our own technology as well. We also do the funded accounts, but the funded account is not the end all be all. The funded account is just the learning platform and the way to build potential processes that can take us further in our regular trading.
Right.
Yeah.
And we've seen several people get $6,000-$7,000, a pop payouts, and they'll use some of that to put in their own brokerage account and start trading like a Ninja Trader, futures account, right? And the commissions are a lot more favorable versus like a Schwab or Interactive Brokers when it comes to commission trading futures contracts. And so again, the idea is like funded accounts are a great like learning environment. They're the training wheels, but obviously you don't want to stay there forever. You want to get to a point where you can, grow your own accounts. And I guarantee once you've ever been denied for a payout, as Tracy, you and I probably have numerous times over the years when we were first learning, you can't be denied payouts for your own real money account because there's no authority that says, no, you can't take money out. You broke a rule. It's your own account, right? And so that's the cool part of it, is you can trade your own like futures account and you don't have to worry. And you can start with as little as $1,000. It doesn't, you don't have to, again, we don't recommend you start there. We recommend you end up kind of migrating to your own account and or funded accounts. So, yep. Okay. Great answer. Let's see. Ashley, she says, I want consistent monthly payouts. Is that feasible? These consistency.
Again, this is a very common question, and all of these questions still stem from the place of looking at this from output versus process input. You have zero control over the outputs of trading. Zero. All you can control is the inputs. Trading is it's a risky venture. There is a risk associated with it. It is all probabilities. There's no guarantees. So some setups have like a 60% probability of success. That doesn't mean that you're going to take a winning trade every time. It means 40% of the time it could be a losing trade. And that's if you took all of them. It's probabilities.
Right.
Now, what I can say is that if you develop a system where you are leaving some reserves into your funded account program, for example, you have the ability to consistently withdraw similar amounts every single month. If you don't drain it every single month, you can leave a little bit. That way, next month, if you don't have, a big, huge winning month, you still have money that you could pull out from there. So there are ways that you can consistently draw every single month a consistent amount, and that you could become I guess, predictive on what you would have on month to month, because I think that might be where the question's coming from is can I plan month to month over the course of the year or whatever based on this trading? And yes, I think you can, but can you guarantee that you'd make profit every single month and then drain it, profit, drain it, profit, drain it? No. You're going to have losing months, you're going to have losing weeks, you're going to have losing days. You're going to even have, just losing streaks in general. So
Sure.
you need to be able to weather the storm. And the way that you can also look at this is, if you're a teacher, a lot of teachers will work 10 months out of the year and then they get 2 months off. Well, in order to plan for those 2 months off, you need to kind of prepare. You need to save over the 10 months to make sure that you have enough to keep compounding over the summertime. Or if you're a contractor, it's a feast or famine. You're going to have moments where you've got tons and tons of jobs coming in and then tons of jobs or tons of months that you don't have any jobs. You need to be able to utilize when you are winning, when you are making money, and have that make up for the times when you're not. So hopefully that makes sense. But it's that's what I would answer for that question. How about you, Matt?
Yeah, and I would say that again, it goes to consistency, and it's just like hunting or fishing. Every time you go out hunting or fishing, you're not guaranteed. It's like I need to bring back X amount of winnings or X amount of fish, or if you're hunting deer or whatever you're hunting, there's no like it's kind of there's not really averages. There's like extremes. Right? Where you come back, you barely fish half an hour and you got your boat, your nets, your tanks are full, or you're out all day and you didn't catch a thing. That's similar to how trading is. You can do your best and still come home empty handed. And so the consistency thing, one of the things we like to kind of recommend is if you're eligible for, let's say, a $5,000 payout, like you've earned it, you're eligible, don't take all of it, take half of it, right? Leave some in there to build up the reserves. So it helps with your drawdown calculations as well. So, yeah.
Yeah, it also helps with consistency by not draining it all the time. So there's a bunch of things that we can teach you that lead to better profitability, and that's one of them. So,
Yep. Okay, let's see. Question number 5. Tyler says, if I run the bots on 10 accounts, do I make 10x? Like there, it sounds like a mathematical question in there.
Yeah, I mean that's basically what it is when you.
In theory, yeah.
I mean, I guess it depends on. Yeah, that's exactly how it works. So you have 10 accounts. Whatever you're making on one, it just duplicates to the other 10 accounts. So if you have one account, 2 accounts is 2x, 3 accounts is 3x, 4 accounts, etc. So yes, that would be 10x. So that's how you compound. That's how you scale, is by building up these accounts and getting multiple accounts that you can trade with.
And when you join our program, we do have a trade copier, and the trade copier does have the ability to change the risk if you have multiple account sizes. So if you're running a $50,000 account and you're kind of copying into a $300,000 account, you may want to 2x or 5x or 6x the quantity. So if the bot takes the trade for 2 contracts and you 5x it, the bigger account has the ability, it's up to you, to take a 5x, so it'd take 10 contracts for a trade. And so you do have the ability to do that. So it's, it varies. It's not always like a 1-to-1. Assuming all the account sizes are the same and you have 10, it's all set up to pretty much mirror everything, then yeah, 10 accounts is essentially 10x. In theory, obviously there's slight variations from time to time. Yep. All right, and then let's see, last question here for this section is Kayla. Says, are trading bots profitable? What kind of returns can I expect? Going back to those guarantees, what can I expect?
Yeah, going back to those guarantees. So I have not traded a single strategy that hasn't been profitable over time. The problem has never been whether or not the bots or the strategies are profitable. It's whether or not I can withstand the drawdowns. That's the reality of it.
You can take the heat from the kitchen.
Exactly. And that is probably one of the biggest challenges with a funded account program, because there is a hard floor. And that is a drawdown. That's what knocks you out of the game. And it's, you can manage it. I mean, you could trade with a much lower risk, or take a much lower risk, take more consideration into not hitting that drawdown. but there's a trade-off, and the trade-off is that it can take you an awful long time before you actually get funded. So
Right.
there's always that offset, right? But the drawdown is the part that either makes or breaks your ability to continue trading. And if you're playing it too risky, you end up running out of money. That's what ends up happening. But if you're able to withstand it long enough, if you have a big enough account, if you have enough ways of recuperating your costs, at some point it recovers. And that's just the reality. Like I said, I've never traded a single strategy that hasn't been profitable over time, but I've traded lots of strategies that don't work during a specific season in the market.
Right.
Yep.
Exactly. And a lot of times people look at it through like a 1 week or 1 month lens saying, did I make money in this little bitty window? And pretty much even Warren Buffett, I followed a lot of his purchases over time. And sometimes he has, I've seen his accounts that are tracked directly to the public stock market. I've seen them go up and down $100 million in a week, up and down $100 million if he's right. And so it, obviously that doesn't mean that it's losing, but over decades of time it's going to gain. But people have such a very zoomed in window. I want to look at it through a week or a month, and it has to be profitable in this little tiny sliver of time, and nothing else matters. Doesn't matter if that was the only losing week ever out of years and years. That's how people look at it. And so this is a consistency over time game. And the at least the good thing is, at least with our technology, we do have we have portfolio tools, and so you're able to build a portfolio, and it's going to tell you how well it performed over like a 4 year period of time. You're able to see every month whether it made, lost, and usually they're 80-90% of them are green months. You have an occasional losing month, but that's how it is, right? It's just like if you're in a pro sports, you can give it your best and still lose the game. That doesn't mean that the skill isn't there. It just means you didn't get lucky or someone was better than you. And that's all it means. It's not
Yeah.
anything more than that. Yeah.
And can you imagine any one of those sports teams, let's say professional sports as an example, any one of those
Like
sports
hockey.
teams, if they went back to the drawing board after every single loss and decided we're gonna change all of our systems, all of our processes, all of our whatever, every single time we lost, and the only time we're gonna determine if this strategy works is if we win.
Yeah.
To me, first of all, it's a waste of time. Second of all, you're going to be constantly chasing losses because, I mean, if you hit a loss on every single time you change it, you're always behind the eight ball because it's that whole idea of, you quit 90% right before you finish the marathon. That's the scenario that's happening. You just keep quitting right before you find success. And that's because you're driven by that immediate need to have results. And it's really unfortunate. So we have in our portfolio tools, we have a funded account simulator, which is a tool that I absolutely love looking at, and I love playing around with it. But what it'll do is it will actually simulate the outcome of your portfolio had you started trading it on a specific day in a funded account. What would have happened? And it's really eye-opening to see, the overall success of that particular portfolio, the kinds of returns that you could have pulled from it had you been able to weather the negative parts of it, the downfalls, the failed accounts. A lot of people will look at the rewards and they're going, oh, I love the rewards, love the rewards. And they glance at the risk, but they don't actually absorb what the risk is. And then when they experience it live, it's like, this is so painful, I can't tolerate this, quit. And then they miss out on all the rewards. But I think it's really important when you can see it, when you can visually see this had, 10 failed attempts before it hit a streak of 20 winning portfolio or winning funded accounts. So, but you had to be able to get through that 10. Now, if you had started with the winners, easy. That's a piece of cake. It builds your confidence. It gets you going. It gets some momentum. You can keep going. But if you start in that losing streak side of things, that's the hard part. And setting those expectations is really, really key to your success. But being able to appropriately set the understanding of what risk is and what reward is, it's the key to all of it, as far as I'm concerned.
Yeah. And I would say that so depending on what you do during a downtrend or during drawdown, and if you do nothing and just let it work, then you have some potential, right? If you do nothing and just let it work. obviously, like when you're running a four-year back test over, let's say, thousands and thousands of trades over 48 months, there's a lot of different market conditions that are mixed in with any 4-year period of time. And so if you're able to see what the guardrails are, is what we kind of refer to it, what are the extreme ups and downs, and you're okay with somewhere in the middle, then you have some potential. If you demand X amount every month from the market, the market's going to humble you. And that's, I've seen it happen